Inflation continues to move lower towards the Fed's 2% target, while declining mortgage rates boosted signed contracts on new and existing homes in December. Here are the latest headlines. Key inflation measure below 3%. Pending home sales surged in December. Jobless claim moves higher. Key inflation measure below 3%. December's personal consumption expenditures showed that the headline inflation rose 0.2% for the month, with the year-over-year reading holding steady at 2.6%. Core PCE, the Fed's preferred method which strips out volatile food and energy prices, also rose by 0.2% in December. The year-over-year reading fell from 3.2% to 2.9%, pushing this important metric below 3% for the first time in nearly 3 years. So what's the bottom line? Inflation has made significant progress lower than after peaking in 2022, with the headline reading at 2.6%, down from 7.1%, and the core reading at 2.9%, down from 5.6%. Plus, inflation is expected to decline even further this year, especially as some lagging components like falling shelter costs are better reflected in the reporting. The Fed has been working hard to tame inflation, hiking its benchmark Fed funds rate, which is the overnight borrowing rate for banks, 11 times between March of 22 and July of 23. They did not hike at their September, November, or December meetings, so they continue to assess incoming inflation, labor sector, and other economic data. The Fed's next meeting begins Tuesday, and their monetary policy statement and press conference on Wednesday could provide crucial hints regarding what's ahead for rates this year. Pending home sales surged in December. Pending home sales climbed 8.3% from November to December per the National Association of Realtors, coming much higher than expected as the improvement in mortgage rates clearly sparked activity last month. Sales were also 1.3% higher than the level reported in December of 22. Pending home sales measure signed contracts on existing homes, making them an important forward-looking indicator for closings as measured by existing home sales. NAR's chief economist Lawrence Young noted that home sales are projected to rise significantly in each of the next 2 years as the market steadily returns to normal sales activity. He stressed that increased supply will be essential to satisfying all potential demand. Jobless claims move higher. Initial jobless claims rose by 25,000 in the latest week, which was much higher than they expected, as 214,000 people filed for unemployment benefits for the first time. Continuing claims also came in above forecast, up 27,000 as 1.833 million people are still receiving benefits after filing their initial claim. Initial jobless claims can be volatile from week to week, yet they remain relatively low on a historical basis, suggesting that employers are trying to hold on to their workers. And while continuing claims have fallen from highs hit late last year, they are still elevated, especially when compared to September's low of 1.658 million filers. This suggests it's becoming harder for people to find employment once they're let go. This has been the Drennen Report. I'm John Drennen, Sales Manager at Fairway Independent Mortgage Corporation. For the last 25 plus years, I have helped realtors nationwide grow their businesses through education, communication, and marketing platforms. Does your current lender offer you these same resources and tools? If not, contact me today and let's get you on a path of success. Now you're in the know.